Gabby from Savills, the head of residential research.
I'm good, thank you. Morning, everyone. So I'm an associate director in the residential research team at Savills, and I specialise in new homes research across London and the UK.
Brilliant. Well, thank you for that. So that's a good sign. The technology works, which is fine. We've seen everybody at least once, so we can sort of crack on. Really, Gabby, do you want to just? I think the first part of this is a presentation. We're going to go from sort of global to local. Over to you.
Thank you. So yes, I'm going to start the session off by giving an overview of what has happened across the UK housing market, and then a bit of a focus on the local market of Slough as well. So just to start, I think it's safe to say that what's happened in the housing market over the last year has been very unexpected. So we came into the outbreak of COVID-19 and we saw the economy plunged into recession. But for the first time, we saw the housing market move in the opposite direction. And that's partially due to the unique circumstances that COVID provided. So also, unlike previous recessions, we came into 2020 with very low house price growth. We were in a very low interest rate environment. And there were generally expectations that it was going to be quite a short and sharp downturn. We, of course, also saw quite quick intervention from the government to protect jobs through furlough. And the stamp duty holiday has provided a bit of an extra safety net for the housing market. So the market has been amazingly strong over the last year, but it has been driven largely by those with greater financial security. So much of the activity that we have seen has been from people reassessing their housing needs after the experience of lockdown. So we found that the market has been very much driven by behaviour rather than economics. So as a result of this, we saw much stronger house price growth over the last year than we would have expected. So it's up at 7.1% in the year to April. And we've seen sort of record-breaking transactions with over 180,000 transactions completed in March. That's the highest monthly figure since 2004. But of course, a lot of these were in anticipation of the stamp duty holiday ending. But actually, with the announcement of the extension, new sales being agreed has still remained very strong. So in March, they were still 25% higher than the monthly average in 2019. But of course, with the market being driven by behaviour, this activity has not been equal across the country. So we know that COVID-19 has changed what buyers are looking for in a home. So there's been more emphasis on internal space, outside space, and less of a focus on being close to work locations. And we've seen that this has really benefited London's commuter belt and across the east of England and southeast, which have seen the greatest increases in new sales being agreed compared to before the pandemic. And you can see on the map, those areas in darkest blue being those that have seen that biggest increase in activity. So a clustering around London, and then also out to more lifestyle locations sort of across the southwest, along the south coast, and up through East Anglia. So what does this mean for a market like Slough? Well, Slough represents significant value opportunity compared to neighbouring markets. So in the 12 months to January of this year, the average transaction in Slough was £358,000. That was 46% lower than the average of £660,000 in neighbouring Windsor and Maidenhead. And even comparing to similar markets such as Reading in the Thames Valley, the wider southeast, and particularly London, again, Slough really does present value. So the average transaction in Slough was again 46% lower than the average in London, despite sitting just outside the capital. Was 15% lower than the average across the southeast, and even almost 2.5% lower than the average for Reading, which is significantly further from London. But actually, despite Slough being a lower value market, it has seen very strong house price growth, shown in the chart here on the right. So house prices in Slough are currently 46% higher than they were at the peak of the market just before the global financial crisis. And this compares to 39% across the southeast and just 29% across England and Wales. And much of this growth in Slough has been sort of in the last 6 years, alongside the construction of Crossrail and, of course, the ongoing regeneration of the town centre. So since January 2014, house prices in Slough have increased by 55%. Now, in terms of who lives in Slough, its demographic is more similar to areas such as Reading and London, rather than sort of its direct neighbour of Windsor. So Slough has a particularly strong rental market, which really appeals to young professionals. So around a quarter of households are living in the private rented sector, and this is higher than the average for the southeast, which is around 18%. And it's more in line with the averages seen in Reading and London, which are around 27 and 26% respectively. So as such, a high proportion of households in Slough are classed as rental hubs, according to Experian. So these are categorised as predominantly young single people in their 20s and 30s who are living in urban locations and renting from private landlords whilst they're in sort of the early stages of their careers. And the appeal of the area to young professionals can also be seen in the age profile of households. So 30% of households in Slough are aged under 40, compared to an average across the southeast of around 22%. And we found that sort of the regeneration of the town centre, those improving transport links and the employment opportunities means that there's an even higher proportion of young people moving to Slough. So we found that over the last 2 years, 35% of households moving to the area were aged under 40. And whilst the majority of movers were moving locally across the southeast, 20% of those movers were coming from London. And now, of course, following the experience of lockdown, we have seen that growing preference for more space, a greater emphasis on quality of life, more buyers looking to markets outside of London. And that is likely to continue benefiting markets across the commuter belt. So bearing that in mind, what do we think will happen next? Well, we think there is less of a risk of a mid-year lull with the extension of furlough and the stamp duty holiday continuing in a tapered form until September, though we do think the market may slow a bit after June. But coming out of lockdown and, of course, the speed of the vaccinations will help to boost consumer confidence as well as the economy. We think that there will still continue to be lifestyle reasons driving the market throughout 2021, with people still looking for space. But from 2022 onwards, hopefully lockdowns will be far behind us. And we do expect the market to return, therefore, more to sort of economic fundamentals. And future house price growth will be driven by interest rates remaining very low, but the greatest growth is likely to be in markets which haven't seen such strong growth over the last decade, such as the Midlands and the North. But the Southeast is expected to see strong growth of 17% over the next 5 years, outperforming London. And that was everything from me. Thank you for listening, and I'll hand you back to Matthew.
Good morning, everyone, again. Yeah, so Slough Borough Council introduced what we've called as a regeneration framework master plan in 2020. The quote on the left-hand side is taken from it. We're very ambitious, of course we are. Slough will be completely transformed. It will be new, it will be vibrant, it'll be a striking economic opportunity. And it really is, you know, we're going to make the most of our past, you know, we'll be born from our strong industrial past, but looking forward to the entrepreneurial spirit. The Regeneration Framework Master Plan is a corporate document. It was adopted by Cabinet. It's linked to our spatial strategy, and of course will be strongly tied into our local plan, which is an emerging document. As part of the Regeneration Framework Master Plan, we were keen to keep a quite tight brief or quite tight scope. So we introduced what we called the concept of the square mile. And I know you're looking at that just now. It doesn't look exactly square, and it's probably not exactly a square mile in every direction. But the key thing is that what we have there is a red dotted line, which is roughly 1 mile in every direction from the new Crossrail or the emerging Crossrail station. And what it illustrates is 31 sites, which will be developed, we believe, over the next 10 years. 15 of them already have planning permission, and 16 of them are described as opportunity sites. Now, we're going to be talking about, between ourselves and colleagues from Berkeley Homes, we'll be focusing on these sites. But importantly, it's £4 billion worth of regeneration within 10 years. What you'll see is, and of course, this is an old document, so it wasn't stage managed, but number 1 on that list is the Berkeley site that we're going to be talking about, the Horlicks factory. The last presentation talked about the changes that have been taking place over the last 10 to 15 years, and really the catalyst for this was the Heart of Slough strategy, which was a strategy adopted by Slough Borough Council over 15 years ago. When adopting the Heart of Slough strategy, we established four quadrants. We had the cultural quadrant, the employment quadrant, the hotel quadrant, and we had the industrial quadrant. What I would say is, as part of that vision, the cultural quadrant's already completed. We opened up the Curve, which replaced our old central library. We opened up in 2016. It's a multi-purpose cultural venue. It was built via our joint venture with Morgan Stindle Construction, and it's already generating fantastic outputs and outcomes. It really is a destination within the centre of Slough. The employment quadrant is work in progress. We already have planning. We've already seen the future works completed, phase 1, and we've got planning permission for the rest of the site. We've already built the bus station, which was built as part of the employment zone as well. I'm going to come on to the residential zone in the next phase, but what you're seeing in here is the hotel zone. Despite the pandemic, we went on site with two Marriott branded hotels in 2019, and I'm pleased to say that we continue to build throughout the pandemic, and the hotel's opened 2 months early in February of this year. It's a double-decker hotel with a residence in the upper floors and a Moxie hotel in the ground floors. The hotels are owned by Slough Borough Council, and we've entered into a long-term lease with SICAS, who are the hotel operator, which is generating a long-term income stream for the council. But the important thing is, it really is a catalyst for regeneration in the town centre. It's a fabulous looking building. It's a statement of place, and it's meeting a demand in town, because it really was a growing demand for 4-star hotels and more within the town centre. So it's a wonderful building that we're really proud of. The Northwest Quadrant, some of you might also be aware of, is called the TVU site, the Thames Valley University site. Slough Borough Council purchased this site from the university in 2017, and we've been developing a master plan in conjunction with Morgan Stindle, our JV partner. We'll be submitting a planning application. It will be a hybrid planning application later this year, and the proposals are to build 1,320 homes on the site. We're still proposing to build 360,000 square feet of Grade A office space, and the ground floor will be filled with a combination of retail, leisure and cultural uses. Construction should start in this site in 2022. It'll be built over 3, possibly 4 phases, and hopefully completed in 2030-31. From an economic development perspective, hugely important to us. During construction phase, we'll see about 800 jobs a year created on this site, which will hopefully as many local jobs for local people as possible, linked to our inclusive growth strategy. And on completion, it'll create 3,000 jobs, and again, hopefully it'll be jobs for local people. So it's something that's very important to the council. We purchased it to make sure that we took control of this key strategic site, which is 5 minutes walk from the Crossrail station and directly across the road from the town centre. So it's one of these place shaping schemes which is literally changing the look, feel and perception of Slough. And you know, we're talking a lot today about the town centre, but Slough's a town, and we have several neighbourhoods, and we have several neighbourhood strategies. One of the main ones is Charley Regeneration strategy. Charley is one of the most multiply deprived areas within Slough, but within that, what you can see from this slide is that we've completely rebuilt the former ice arena. That's in the top left-hand side. And at the bottom, you can see the completed ice arena. We've also built new schools within Charley. What you see there is Claycott School. But in December last year, Grove Academy opened. That's a school that can accommodate 1,900 pupils, 1,200 secondary and 700 primary school pupils. And that's a £50 million scheme on its own within the centre of Charley. So there's regeneration happening all over Slough, sometimes led by the council, but if not, we're always involved in that regeneration. This is one of the other sites we're working on just now. This is Montum, and again, what you can see in that site is the ice arena in the left hand, the kind of top left hand side to the screen, and you also see the former leisure centre. We're demolishing that site, and in its place, we're going to be introducing a scheme with 212 properties, 20% affordable housing. That scheme now has planning permission. Will go on site in early next year, and again being developed through our joint venture with Morgan Sindall. The last slide I'm going to show you is our most recent acquisition, the former Axel Nobel site. Axel Nobel sold the site to Panettone, who secured outline planning permission last year for the entire site. The northern part of it is being developed for data centres, but the council purchased the southern part of the site, and we'll be submitting a planning application early next year for a scheme which we hope will include up to 1,000 new residential properties. And again, you could literally walk within 5 minutes from that scheme to the new Crossrail Centre, and it's within a 10 minutes walk of the town centre. So it's very much within the square mile of the town centre. What that's proving to you is Slough is completely changing. There's absolutely no doubt about it. Within the town, we've seen massive regeneration in the centre. We've seen huge regeneration in the suburbs. Over the next 10 years within the centre of Slough, we expect to see 9,000 new houses built, over 500,000 square feet of office space. And of course, we continue to work with British Land, who are the development managers for the town centre. We're hoping to see the planning application submitted later this year for a mixed-use scheme in the town centre, which will completely transform the town centre. It will be a residential-led town centre, which will have well over 1,500 new homes. It will create a new retail offering, a new cultural offering, and a new F&B offering, and create that trickle effect throughout the town centre, in fact, throughout the town, and create thousands of jobs and create a really vibrant, thriving town centre, which again, of course, is just minutes walking space away from the Crossrail station. And that's all my slides, Matthew.
Excellent.
Hi, good morning everyone, thank you. I just wanted to talk to you today about why Berkeley invested in Slough, and also just give you an overview on our Horlicks Water development. So why Slough? As you've heard both from Stephen and Gabby, Slough is so well located with its excellent transport links and access to jobs. We see Slough as being on an upward investment trajectory with so much investment in the town centre, as Stephen touched on. Slough is a town of growth and improvements. It offers exciting potential to the investor. It's a thriving business location and home to a high number of global companies, and one of the biggest business parks in Europe. With average property prices around 40% less than those in London, Slough offers all the benefits of London without the price tag. For owner occupiers, there's a wealth of employment, leisure and educational opportunities, great schools, beautiful parks, and the royal towns of Windsor and London nearby. Everywhere you look in Slough, things are improving. There's been major investment in local parks, community centres, schools and sports facilities, as Stephen highlighted. There's a further aspiration to make more improvements in the town to create a more welcoming, attractive place for local people to shop and relax. Crossrail is coming, and the council is working closely with Network Rail, making the case for the direct Western rail link to Heathrow. All the major office developments are underway, and the local economy continues to grow and thrive. All of these changes come from strong political leadership and a bold vision for what can be achieved here. Slough is very much open for business. It's clear that the Borough Council's representative wants to get things done, and they want to get things done properly. Slough has a real passion for creating the new homes and communities and making the town more of a success. And that's why Berkeley has such confidence in Slough's future and why we invested in the town. We share with Slough their clear vision for creating places that work for everyone. And we've worked really collaboratively with them to design and start to deliver a distinctive neighbourhood and new community within the town. When the opportunity arose for us to buy the former Horlicks factory, the 12-acre site that was formerly owned by GlaxoSmithKline in 2018, we jumped at the chance. The site had all the key ingredients to make a successful development. The location being less than 5 minutes walk to the station, and the scale of the site allowed for us to make a new place and be ambitious with our architecture. The Horlicks factory itself created a brilliant centrepiece for the anchor of the scheme in the centre. In March 2020, Slough approved our planning application for 1,300 rooms on the site, and we started works immediately. Just looking at the wider benefits of what the investment in the town are benefits from the scheme. Not only are we delivering the 1,300 homes, 325 of those will be affordable homes. There's £5 million going to the council to spend locally for improvements to roads and schools. Through the supply chain, we anticipate over 6,000 jobs will be created. The heritage assets will be restored and retained, and the new residents that are coming into our site will support the local facilities and help with that nighttime economy within Slough, and it's just an upward spiral for the town centre with extra residents being there. Here's an image of what the restored building will look like. In its heyday, the Horlicks factory produced the famous malted milk drink for over a century between 1908 and 2018. Now ready for its next chapter, the Horlicks Quarter will be a blend of the historic and the contemporary. The iconic building that you can see on the screen will be retained and repurposed, and it will provide a number of apartments, the scheme's community facilities, and the children's nursery. This will all be centred around an impressive atrium within the building and topped with remarkable penthouses with views to Windsor Castle. The Horlicks factory and the clock tower will be retained, and the existing war memorial on the site will be relocated as the centrepiece of the Memorial Gardens, which is the station you see in front of the building. Just through the site, the iconic factory chimney has been restored and new lettering added, and this now forms the centrepiece of our first phase of the development that we call Aquifer Gardens. You can see the new build apartments look over this parkland with high quality landscaping, seating and water features, and we hope this will be a space for all to enjoy. Within the scheme, we've provided on-site facilities, including a cafe at the bottom of the factory building and new retail outlets. For our residents, we'll be providing a gym, a lounge, a game and a co-working studio, as well as a concierge service. The specification of the dwellings and the quality of the public realm and the offering of the residence facilities are as you would expect in any London development without the price tag. Here you can see some of the progress today. As I say, we started in March last year and we've worked through the pandemic. The blocks are going up and our first completions actually happened in January 22. Just a brief overview of our first properties that we had available here. We have Darjeeling House, which is one of the blocks that look over the Aquifer Gardens. This has been very well received in the UK and internationally. And the first block is now over 80% reserved with prices from £260,000. We are just shortly about to launch our next block of apartments, Artesian House, which is 33 apartments. This sits directly looking at the chimney that we showed you. And we're expecting that to have the same level of interest. Just in summary, I think we're really proud of the development we've created. We think this will be a landmark development within the town and a new and exciting quarter and a thriving new community. I'm really grateful for your time this morning and happy to answer any questions.